Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will examine the precious metals market for us. Chief Investment Strategist for InstitutionalAdvisors.com, Bob Hoye, who's also a market historian, looks at the signs that might indicate the equity markets have peaked. He also comments on the meltdown happening at Home Capital and Moody's downgrading of Canada's 6 biggest banks. The Corbett Report's James Corbett checks in from Japan and tells us what's happening in Asia. China is about to host a big conference promoting its so-called Silk Road to expand international trade, and Canada will be there. Plus, at the end of our show, we'll have 2 company showcase updates, one with Jim Pettit from Aben Resources, and the other with Larry Reaugh, CEO and President of American Manganese. We'll talk to Ross Clark right after this.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy, Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
How has gold been doing?
This has been an interesting week for the precious metals. We had the gold market giving up ground pretty much through the last week and a half, down quite a bit. And, you know, this is sort of the unwinding of that April top that we had when we had the anxiety over the American missile attack into Syria. Then we had the tensions as far as North Korea was concerned. And, you know, the normal fallout from that, and this is pretty consistent over the years, that when you have times of conflict or tension like this, you don't find a good low in terms of the gold or the miners until you have a sell-off where the relative strength index becomes oversold. And we got that this week, May the 8th. The relative strength on gold got down below 33 on the RSI, and that's the level that we have seen over the years that has been a good catalyst point to produce at least an interim low. The drawback on this one, though, is that it's happened too fast. The normal process usually takes anywhere from 8 to about 16 weeks. And so far, this one was only the better part of 3 weeks off the high. So the biggest probability that we see when we take a look at gold will be that we get a recovery bounce. And, you know, if we look at what we've come from recently here, from that December low to April high, the low that we put in this week on gold retraced 50% of that rally. So now we probably have a bounce off this low. However, the best probability is that we will go down and test or probably take out this low sometime out in June, July, and it'll be the characteristics of that test of the low or lower low that really set up the potential maybe for the summer rally that typically would take you out into the end of September into October. But there'll be some parameters that we look for when we get into that June, July time frame.
Is there a seasonality to gold?
Oh, yeah. I mean, there is. You typically will get a good run out of a late November, December bottom, and particularly that tends to be led by silver in the January, February stretch. And in the big bull market runs like we had in 2011, that'll carry you out into April. But typically that high will be more of a February high. And if you look at what's gone on this year, the mining stocks, they topped out in that first part of the run. Gold managed to put on a marginally higher high into April, but silver only did a tested high. And, you know, with silver, there we were, the commitment of traders numbers. So this is the speculative and commercial positions that we look at in the futures markets. We saw extremes. We saw the highest level of speculative longs in silver here 3-4 weeks ago than we've ever seen. And we also had the GDXJ, the Junior Mining Index, get up to the point where there were so many commitments and positions there that they weren't able to buy the underlying assets of these small mining companies. So that was just a great sentiment indicator as to how vulnerable this market was going to be, because you had so many people that were weighting themselves to the bullish side. And so so coming off the top, we ended up with 14 consecutive days in silver with equal or lower closes. And we've only had that, me, I'm a historian. And this was the 5th time since 1965 that silver has done that, where you've been actually 10 days or more. There was one that was 15, this was 14 days. And so when you're selling off that hard, that's just the classic unwinding of those leveraged positions that were on near the top. It's the margin clerks who then gain control and force liquidation of people who are undercapitalized. And by the time we got to the tail end of the week, we had capitulation readings that we look at in both silver and gold. So the probabilities for a bounce are here. But once again, if I look at the silver and I see what's happened off of these capitulation lows, you get a bounce, but the next good low is still another 3 to 6 weeks away. So it fits the modeling that we have on the gold. And once again, probably looking at the, say, a June-July period, and that would set up for the second part of a seasonal play, which is for the summer rally through until the fall.
Ross, thank you so much for being on This Week in Money.
Always enjoy being with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy, Vancouver. Coming up, Bob Hoye comments on the home capital meltdown next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Bob Hoye. He's a market historian. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
A lot of focus on the home capital group and the meltdown going down there. Can you give us the story and some background to it?
Yeah, you could call it these days a subprime lender in home mortgages and whatnot. And a company got a bad stick here recently. They had some agents acting for them in placing mortgages, and then the securities people somehow didn't like them, and the way it was removed was quite shocking. So all of a sudden, the company, I think at the end of March, started to lose deposits very fast, which is a killer. So it was prompted, rather than some depositors looking and saying, "Oh, I'm getting a bit scared here and get out." So, and then it's turned into a disaster. But it reminded me of when I was first in the business, early days. I started in 1963 with Wood Gundy, and then in 1965, I was in their Toronto head office as sort of an assistant mining and oil analyst, and as part of the training program, which was outstanding at the time, and they paid us reasonably well also. I spent some time on what was called the Ontario sales desk, and then in the investment business, believe it or not, there weren't quote machines all over the place. There was one on the sales floor, and so being on the sales desk, you also handled some of the staff's orders. And so the guys would come in before going to lunch and check out some quotes, and then the chief economist, I think his last name was Grant, checked out a quote on a company called Atlantic Accepted, and it was trading at 21.5, and he says, "Oh, Bob, I've got a couple hundred shares in my account. Let's just sell them, enter the order at the market." And I said, "Okay," we did that. And then the irony was, that was at noon Toronto time, so the market closed at, 4? And then the next day, the news came out overnight, and wham, the stock crashed. And we all kidded Jim about, "Oh, Lordy, did you know?" And actually, he did not know. But the thing in my mind was that at first this was just a local problem with a Canadian financial company, and then there was ripples across other financial companies got set back, and eventually there was some concerns in the States as well. It wasn't a huge deal, but it was a bit of a setback. So here we have a company that got itself into an unfortunate position, and then the sad part is that they raised a $2 million line of credit, $2 billion line of credit with a pension fund. This stinks to high heaven. That one. This is not right. Providing a line of credit, and they heard somebody on TV on the company's behalf this morning saying, "Oh yeah, they'll work it all out and everything." But I doubt it. When these things go bad like this, it's very hard to fix because the belief has been shattered. So at any rate, this could spread to others, and it could spread to similar companies in the United States. Now, it's important here to understand that we've been in a credit bubble that began when the last contraction ended in 2009, and it's been the most incredible credit bubble in history, and it includes a huge bubble in bond markets around the world, interest rates down to zero in many countries and down to even minus numbers in some instances, which is unprecedented. So this then is unnatural, and unnatural in the financial market can't last too long and will become a problem, and it'll change, like mostly in our own experience, I would say the last 30 or 40 years in the markets. When interest rates went up, it was when inflation went up, and you then had to factor in the inflation premium into the yield structures. But this one, I don't think it's going to be inflation going up. I mean, we've been on a boom for a long time. Commodities, industrial commodities have been weak recently. But what it will be is the typical post-bubble contraction, where the problem is that those who happily took on the debt during the mania find that they can't service the debt. And of course, part of the debt expansion was that people were borrowing money to service debt they had taken on earlier. So it's a bit scary out there. So this would be a classic post-bubble deflationary problem in the credit markets, and it sort of feeds on itself. You've got a large portion of the debt that was expanded over the last number of years was written in the financial center, which means New York, and it means that those who took on the debt happily have to service it, and that's never a happy experience when you're in tough times. So then the outside borrowers have to get their hands on U.S. dollars to service their obligations into the financial capital in New York, and it becomes extremely painful paying off interest in hard currency notes when you're living in a soft currency condition. It's a classic disaster. So this then relates to this problem in Canada with the capital company suddenly without deposits and believing that they can be fixed. I doubt it. And they also are people thinking that, oh, this is just a small Canadian issue, which it is. It's a small Canadian company. But these things have a tendency to ripple out, and this is what's happening. And if we were like in 1965, which was in the early stages of a boom, hey, no big deal. But where we are is in 2017, in the final stages of the most incredible bubble in history. So it's a problem that's worth monitoring. And then, of course, you had Moody's, the credit rating agency, downgrade the 6 big Canadian banks, which are proper banks. They're still all A-rated. This was just a one-notch downtick. But it was signaling that the rating agency is on its toes, and it was looking at, and the main reason was that of all the froth in the residential housing market, and of course there'd be mortgages all over the place, and then my own guess is that probably the Canadian banking patch have been lending money to the oil patch. I mean, they always do. So there's a possibility of a setback to the Canadian banks, and the downgrade by Moody's doesn't necessarily mean that their cost of their loans are going to go up. What it means is just a warning out there, and investors should also take a look at it and say, hey, a rating agency says there's an increase in risk, and then the stocks haven't been acting well for a few months. We had big upside exhaustions and sentiment readings, technical readings back in February on the sector. Royal Bank, TD, Commerce went up there and generated big technical readings very close to the highs, and they've been coming down. And then also in the last 2 weeks, the U.S. Bank Index, the BKX, has been coming down quite sharply as well, taking out some key support. So why are we interested in the bank stocks? Well, because in 2007, they set the high before the senior stock indexes did. So they served a purpose there as kind of a leading indicator. And they're doing it again. So we should look at that, the weakening banks, as a leading indicator against when the senior stock indexes like the S&P, the Dow, or the NASDAQ would roll over. So it all fits together, doesn't it, Jim?
Should people who have money in a home capital account be worried about that cash?
Well, yes. There's probably deposit insurance there, but it may not cover your whole. Sorry, I'm not on the details of this, but it may not cover your whole deposit. Maybe limited to something like 100,000, and I'm only guessing. And I'll also put in an editorial against deposit insurance because it allows for reckless banking. People say, "Oh, there's a deposit insurance. I can put a deposit there, and I'm safe." So they end up putting money into a bank that or an agency that may be reckless. And I know that back in the 70s when the Canadian politicians followed the American politicians by putting in deposit insurance, the big banks said no, it wasn't needed. And indeed they were right. But nonetheless, and their argument was the same as what I've said, is that it would allow for reckless banking, which it does do. So I think we're facing some interesting conditions, not just in the Canadian banks, but also in the U.S. banking system. And because the credit conditions after many years in party mode are beginning to change.
We'll have more with Bob Hoye next on This Week in Money.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Bob Hoye. He's a market historian and the chief investment strategist for institutionaladvisors.com. Bob, one of the people I talked to earlier in the week said some of his people are talking about what they call a market melt up. In other words, they're saying they expect a panic buying of stock the same way we saw panic buying in the real estate markets in Vancouver and Toronto. The belief being that things will never be cheaper. You have to buy now or you'll lose out forever. Do you see a situation like that happening?
Well, that's certainly a very bullish comment on the stock market, but let's look at technical indicators, which earlier in the year we had our own proprietary stuff, upside exhaustions. We also had sequential sells. And some of the sentiment figures were the strongest going way back into the 1980s. So there has been a bullish sweep of opinions and sentiment and attitudes measurably extreme. Now, the interesting thing is that while those were, let's say, registered in February, the market hasn't really rolled over. At least the senior stock indexes have not rolled over. But leading items such as transports and bank stocks have rolled over. So, yes, it's very tempting to say you've got a bubble in real estate and we should see an equivalent blow-off in the stock market, but a number of technical indicators say we've already had that. So then the next question is, well, why is the market up when it is now here? And our view has been that you have the tendency for favorable stock markets to have a high in May or June. And this goes all the way back to the South Sea bubble of 1720 when in London, the South Sea Company, which was the lead player in that game, blew out in June, dithered around during the summer, and crashed in the fall. So, and then there were other bubbles, 5 others, where in Europe and in London they made their highs in May or June, then dithered around in the summer. But I'll tell you one thing: when you've had a fully blown stock market as this is, it's not so much the top that matters, it's that the heavy liquidation will likely come in the fall. So at the moment, what we're looking for, have been looking for in the stock market, is a rise into the favorable season, hopefully one extra leg of zest to hang your hat on for a market trade, a market reversal. And this is still possible. But as to saying there could be a sensational rise, we're kind of doubtful, and one should be dancing close to the exit, because you've had sensational technicals in the market already, and then we're at, so to speak, May, June, the time when markets can set their high. We also were watching the European market with the stocks index, and with the news of the election win there by sort of the establishment. It rallied their stock market, but not up to enough to say it's excessive. Hot, but not excessive. So I think that one should be dancing close to the exits on this one. And as of this week, there's been enough of the change in the yield curve, which is the difference between short-dated treasuries and long-dated treasuries, and it is changing and in a direction that is no longer party. And that actually happened in May of 2007, and then in June it was followed by the spreads reversing to widening. Spreads have narrowed hugely since the disaster ended in February a year ago. But all we can say now on spreads, which of course is the difference between high-grade and low-grade bonds, is that they're no longer narrowing. Indeed, there's been some technical measures that have said that, hey, this is pretty hot stuff. So we're looking for a reversal there, and we can even go back to 2007 or 2000, the dot-com bubble, which technically had its high in March of that year. But then if you take a look at the S&P, it corrected hugely and then almost made it to the highs in September. But then the change that we're getting now in the yield curve is similar to what happened in August and September of 2000. So we're aware that the credit markets are capable of turning the speculation off, whereas, of course, the central bankers don't want to turn the speculation off. They want to keep it going. But when you look at 300 years of history, when the credit markets get fully extended, they will change no matter what the senior central bank does or wants. Otherwise, you wouldn't have a credit cycle and a business cycle. The bankers would be able to control it. So what happens is that the central bankers are pushing credit out the window against the speculative moves that are going on. And then when the speculation ends, the power in the financial markets shifts over to the margin clerks. And their job is to get the accounts in line. And they do it. And whereas the central bankers who have become reckless, you can say that their job lately is to get the accounts out of line. So it'll be a massive struggle between central bankers being ambitious and margin clerks just doing what they do, which is get the accounts online, sell them out. And that's the way every financial contraction works. It goes on until the last offside borrower is forced to liquidate. And it's not a pretty sight. And as I mentioned, there's a tendency for these to be discovered in the fall of the year, the periods of heavy liquidation. So we're watching for it.
Well, you'll recall, too, we had Black Friday in August 2015. Are we setting up for something like that if you're taking a look at the banking stocks and the transports?
Yeah, I don't know. Transports and banks, as I mentioned, are leading, and let them trickle on down. And the market will really tell us what's going to happen, and the credit spreads of the yield curve has only just started to change. Credit spreads have yet, so there's a few things yet to fall into place, but there is a probability that if you've had party time in May and June, it's quite likely that you'll have liquidation time in the fall. And, of course, you go back to last October, where that would then be a month, if there was any problems in the financial markets, they would be cleared in October. And there was nervousness about the U.S. election and things like that. And then those markets cleared. And then on the S&P, our technical work, we got a springboard buy on November the 3rd, which, of course, was before the election. But that signal only comes in when you're sharply depressed in a flat to rising longer-term trend. So that was the springboard buy on November the 3rd, and its influence has prevailed since. And but the excesses have been clocked, and the items associated with change are changing. And as I said, we're watching for the exits on this. Sure, if we have a high here the next 3 or 4 weeks, that falls into the May-June pattern, and then you could have churning around in the summer, then perhaps another rush to rally things up into September, and then you would have the situation where everybody says, okay, great, I'm in. And then they're looking around for somebody else to buy, which then discovers the greater fool theory that when you're buying exceptionally high-priced stocks, you're buying them because you're confident that somebody later on will buy them at yet ever higher prices. And that's a nice phrase for it, the greater fool theory. And at some point, you run out of greater fools. And the irony is that this is anticipated by, first of all, bank stocks weakening, and then the change in the credit markets with the yield curve changing, and we've got that one, and we're now waiting for the credit spreads to change, which will be the next step. So, very fascinating market, Jim.
Do central bankers really play the big role that they say they do?
Oh, they're playing a role, but, they are foolish. They think they have more power than they have, but you go back to 2007. In December 2007, which afterwards was decided that that's when the recession started, the Great Recession, the worst one since the 1930s. And Greg Mankiw, a highly respected economist at Harvard, said that nothing could go wrong. And the reason why nothing could go wrong, he said, because there was a dream team of economists at the Fed, and that was proof against problems. And, of course, it went bad, and it went very bad. So the guys thought they could keep a bubble going and said so. Then it crashed, and then they woke up and said there was a crash, and then it was the worst since the 1930s. And then they put in all kinds of QEs, quantitative easing, money buying this, and all sorts of things. And then they said that without their efforts, the crash would have been worse. So let's look at in London in 1929, which was the senior market. Their main stock index fell something like 49% in the crash. Now in New York, it was a more junior market, and the S&P fell something like 85%. So on this one, and then New York is now the very senior market, and what happened to the S&P? Oh, it fell 48%. So it was just like the crash in London. And you got these policymakers who are going around saying, oh, without us it would have been worse, and even in the midst of the worst part of the crash, they think that they stopped it. Otherwise the crash would have lasted forever. And then they move on. So they moved from saying a contraction was impossible to a year and a half later saying without us it would have been worse. Now that's chicanery. It's everything, every bad word you can think of. And so here they are. They're doing the same things. They really believe that they have the ability to keep a financial party going, and they haven't. And I'm hoping that as a little more strain comes into the credit market, that some big official will be prompted to say, oh, nothing can go wrong because, we will lower interest rates, or, there'll be some magic remedy they will refer to. But that will be a highlight. That will then be saying, watch out, she's going to fail, the moment they say that nothing can go wrong.
Bob, thank you so much for being on This Week in Money.
Well, I hope we're not wrong. Jim, it's good to be with you.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Coming up on This Week in Money, James Corbett. He'll take a look at what's happening in Asia.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to the show, James.
Thanks for having me, Jim. Always a pleasure.
Big huddle up in Beijing next week about trade. Can you tell us about it?
It's going to be a forum of 28 different nations convening on Beijing for the first ever Belt and Road Forum for International Cooperation, which is a fancy name for what I'm sure people have at least heard about, which is this Silk Road Economic Belt / Maritime Silk Road initiative that China is putting together, where they are pumping in they've committed upwards of $1 trillion so far in various infrastructure and other spending projects, basically along their trading routes between China and Europe. And so this is going to be their first ever forum for international cooperation that they're organizing under this banner. And they're inviting a number of states, including, I think the latest word is that North Korea may even be sending a representative. So this is essentially globalization 2.0. That's not my term. That's what the Chinese state mouthpiece media is calling it. And the idea here is that China is going to be leading the shape and taste of globalization in the coming decades, the way that the U.S. has led it in the past. And they're going to be doing it through trade and cooperation and infrastructure investment spending, or at least that's the party line that's being towed right now. So it'll be very interesting to see what develops here. It'll be interesting to see, for example, who shows up at the forum representing the United States, whether it's a high-level cabinet official or just some lowly lackey, and what type of agreement they come to, or what type of statement that they end up issuing from this forum. I think there's probably going to be more attention focused on this part of the world than there has been in the past, and that's partly due to the retreat of the U.S. from the world stage to a certain extent as it turns more inward, and as China looks to basically step up to the table and take over some of the reins, pick up the slack, as it were, from the U.S.
Is Canada one of those 28 nations?
I believe it is. I don't know what representative they're sending, but at any rate, I believe they've certainly been invited to attend.
Well, if it's our foreign affairs minister, she's from Peace River, Alberta, my hometown. So obviously she'll do a great job. And of course, Canada has embraced international trade. They just got the European free trade deal done. And of course, Trump again is making noises about withdrawing from NAFTA. They took the U.S. out of the Trans-Pacific Partnership. He really wants to go in isolationism. How does that factor in with China's point of view?
Well, in some ways, this is a perfect position for China to be in, especially at this moment of time where they are looking to take this trillions of dollars of reserves that they've built up through their trade surplus over the last few decades and try to use it in a more constructive manner than simply buying U.S. treasuries. So they are starting to plow some of that money into these types of infrastructure development projects along this Silk Road economic belt that they're trying to construct. And that, of course, is beneficial to the countries that they're investing in, but perhaps even more to the point, beneficial for the Chinese economy because it helps the construction of these transportation networks that will ensure delivery of Chinese goods all the way through to Western Europe and everywhere in between. So it is, as China likes to call it, it's win-win cooperation is their game plan here. And the fact that the U.S. is kind of retreating from the scene is good for China because it certainly puts them more in the driver's seat for that type of construction of a new paradigm.
Does the U.S. face being left behind when it comes to international trade?
It's certainly a possibility. I think people certainly in Central Asia and increasingly in Eurasia generally are looking more towards what they can get from their Chinese relationship than what they're going to be able to get by the U.S. or its partners and allies, because certainly China continues to grow and continues to grow in importance on the world stage. So I think a lot of people are at least taking more notice of China, and I think the fact that they're assembling this forum with 28 different nations is a sign of China's growing geopolitical clout that they're building up on the basis of this economic clout.
China also seems to be a lot friendlier lately than it was perhaps even 3 or 4 years ago.
Well, I guess it depends how you measure that, but certainly they are cozying up to a lot of different people, and even to the U.S. In fact, they have extended an invitation for the U.S. to join what they call, quote, the symphony of the Belt and Road Initiative and the Chinese-led Asian Infrastructure Investment Bank that people might remember was created a few years ago, with the United States being a notable holdout and saying they would not join the AIIB. But the UK and other American allies did join that infrastructure investment bank. So it's an interesting sort of turnaround where basically now China is extending the olive branch, as it were, to the US, and it remains to be seen what will be done with that. But China also has a bit of leverage because, as we've seen, for example, in recent months, the tensions on the Korean Peninsula can be used even to Chinese diplomatic advantage, with Trump backing down from his pledge to declare China a currency manipulator, as long as China keeps their own backyard, as it were, in order with the North Korean situation.
And Canada is looking for more Asian trade, with Trump making noises about ripping up NAFTA.
That's exactly right. That's one of the obvious and predicted fallouts of the troubling or the destabilization of the American trading relationship is, well, Canada doesn't necessarily need the United States as its only major trading partner and can certainly look for foreign markets. And China has been on that list for quite a while, Harper leading several trade trips over to Beijing during his tenure. And now, of course, Trudeau has the Chinese option on the table as well.
And I think even part of that diplomatic thing, although people wouldn't look at it, the NHL is going to be playing some exhibition games in China. First time that's happened.
Very strange, very interesting. It's certainly an expanding world that we're living in a lot of different ways, and some of this is forced from on high. Other parts of this is more spontaneous. But at any rate, it is changing, and things like that may seem trivial on the bigger sense, but I think they're interesting signs of what is to come in the coming years.
If you can sell 1 billion hockey jerseys in China, I'm sure somebody would notice.
I think you're right. I pity the two teams that have to put that in their travel schedule.
You're listening to This Week in Money. I'm Jim Goddard. We're speaking with James Corbett, who's in Japan. James, of course, the elephant in the room when you're in Asia is North Korea. How worried are people that there will be an armed conflict with the dictator there?
Paradoxically enough, I would say that people here are probably less worried than people in North America, which doesn't make a lot of sense unless you're over here and you realize a couple of things, one of which is that this brouhaha, this latest round of noise from North Korea, is part of a regularly scheduled event at this point, and it's almost like clockwork. Every year we start to see the tensions rising at the same time, coincidentally, quote unquote, right after the U.S. conducts its joint military exercise with Korea every year, South Korea, where they practice basically an invasion of North Korea. And North Korea, for some reason or other, tends to take umbrage at that, so they strike out and they make all sorts of big pronouncements, and they usually test a nuclear device and or a missile, and people turn their attention to North Korea again for a month or two, and then it goes away. And this seems to be part of that cyclical event. But I would say that there are some differences. Obviously, each time this happens, Korea's technology is advancing all the while, so their ability to potentially deliver a nuclear warhead to the United States continues to grow, although I still think that's a ways off, and any pronouncements otherwise tend to be on the propaganda side. But another thing that makes this not quite so on the edge of our seat, we're all waiting to be blown up at this point, is the election of the new South Korean president, Moon Jae-in, who just got elected. And not only that, not only did he campaign on basically restoring or at least helping to repair ties with North Korea and to damp down some of the rhetoric that we've seen from the previous South Korean president. He has just, or he is expected to nominate for Prime Minister Lee Nak-yeon, who is the governor of the South Jeolla province. And this Lee Nak-yeon has experience in Japan, so he can help on that front. And some of his other appointees have specific experience in North Korea. So it looks like the Moon Jae-in administration in South Korea is going to be about reaching out to neighbors rather than trying to form more battle lines. And if that is the case, then we can certainly expect to see less, if not less of the pronouncements, at least less of the actual tension between South and North Korea, and perhaps even a full reinstatement of the old Sunshine Policy, which was in effect in the late 1990s and early 2000s as a way of trying to promote engagement with North Korea rather than just making battle lines and making harsh pronouncements, which was, if people can recall, past the previous 24-hour news cycle, back in the early 2000s, it was the Bush administration that derailed, purposefully sabotaged that Sunshine Policy, which directly led to the creation of and testing of the North Korea's first nuclear weapon device. So I think we have to put this in its historical context, and when we do so, we see that the North Korean situation doesn't have to be this tense standoff situation, and I think President Moon Jae-in shows some signs that he may recognize that and may be willing to move in the other direction, despite what the United States wants at this point.
Wasn't there a time that North and South Korea had joint sports teams?
There has been definitely periods of rapprochement and periods of tension, and we have been in a period of tension for the last decade and a half. But as I say, that was part of a deliberate sabotage of the Sunshine policy that was in place in the late 1990s. And since that point, we've seen the deterioration, so that people who are don't have much historical perspective may think that this is, some sort of, this is the way the relationship has always been. It really hasn't. And there have been some bright spots along the way. There have been joint economic zones in the demilitarized zone between North and South Korea, where businesses have been, joint North-South Korean businesses have been run in factories with workers from both sides and things along those lines. But even that has deteriorated in recent years as the rhetoric has been ratcheted up.
And of course, Seoul itself doesn't want to see a conflict. They're only 35 miles away from the border. I mean, they're almost within hand grenade throwing distance.
Yeah, I mean, put it in perspective. I mean, it's the difference between Manhattan and New Jersey. I mean, whatever happens in the demilitarized zone is going to affect Seoul directly. And of course, Seoul is the major city in South Korea, and it's not only its capital, it's also its most populous city by far, and contains 1/4 of South Korea's population. So this is why the suggestion of a nuclear event on the Korean Peninsula is should be completely off the table on any side for any reason, because of course it means essentially the annihilation of the Korean Peninsula.
Anything new happening on the Chinese real estate front?
What is the latest on the Chinese housing? I haven't kept abreast of this particular week, but again, I know that the Chinese government has been attempting to crack down on the and to some extent successful on cracking down on rising property rates in its key cities. But I think perhaps the more interesting story from at least the previous week is the of course ever-present interest of Chinese investors in the immigrant visas, the EB-5 program in the United States, where people committing at least $500,000 to an American business can get a visa, basically a green card to enter the U.S. And Jared Kushner, the son-in-law of President Trump, has gotten in some hot water for some shady dealings he's been doing, trying to lure Chinese investors into a property development in New Jersey that he's been doing called One Journal Square. It's a 2-tower luxury apartment that was slated to be a $400 million project that was going to attract this star tenant and involve residential and commercial space and all of and had quite a bit of money. I can't remember the exact number, but tens of millions of dollars committed from the New Jersey government. But all of that has fallen apart. The star tenant left. Some of the funds that have been committed by government have been withdrawn. And now they're scrambling to find Chinese investors to basically plug the gap. And as a result, Kushner's company is basically offering these investors a green card, basically saying, you invest with us, you'll get a ticket into the U.S., which obviously is not sitting well with a lot of people in the political situation in the U.S., with basically Trump's son-in-law essentially selling green cards to the United States. At the very least, the optics of that are not very good. So I think that's basically, again, the state of real estate investment in China, which is, of course, as always, centered more on basically investment around the globe.
Is the Bank of Japan still aggressively buying up stocks of Japan's 50 biggest companies?
They are indeed, and they are also buying bonds, making it difficult for actual banks to secure bonds in the open market. This is really the point of the limits of what the Bank of Japan can really do. At a certain point, they will run out of bonds that they'll be able to buy in order to continue their policy of trying to keep the interest rates at the zero curve for 10-year bonds. So it's obviously a precarious situation. Japan actually thinks, or the rhetoric recently is that the Bank of Japan has been exceeding and is actually starting to turn the ship around. They're not getting the inflation that they wanted, but they are starting to reach some of their other growth targets. So the governor, Haruhiko Kuroda, has been going on the talk show circuit and trying to talk this up as if they're starting to meet their goals. But I venture to say that a lot of this growth is still predicated very much on what the Bank of Japan is doing, and should the Bank of Japan take their foot off the gas pedal, that's not going to be very good for the stock or bond markets here.
James, thank you so much for chatting with us.
Thank you for having me on. It's always a pleasure.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Bob Hoye, and James Corbett, and thank you for listening. And right after the show wraps up, we'll have 2 company showcase updates, one with Jim Pettit from Aben Resources, the other from American Manganese CEO and President Larry Reaugh. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
We're talking with Jim Pettit. He's the president and CEO of Aben Resources Limited, online at ABN.V. Welcome to the show, Jim.
Thank you very much. Good to be here again.
How are things progressing for the Forrest Kerr gold project?
Well, they're actually moving along well. Haven't had a lot of news out lately, but we've got the data compilations complete. It was huge to get through because of the amount of information available to us, from the last 30 years. Over 100 drill holes and almost 20,000 soil and rock samples. It's all been vetted and compiled and put into priority targets or areas we want to go concentrate on this year. So we're getting ready to go. We've got about 4 regions we want to go at hard. We're planning to drill, we'll start at 2,000 meters and see where we go from there. We hope to be in there by mid to end of June. It really depends on the weather and the snowpack and how it's going away. But it's all good. It's all real good.
What are the highlights you hope to achieve?
Well, we've got 3 areas that we'd like to drill right away, and they're areas that had significant success in the past, and they're basically concentrated to the upper to middle half of the property. There's an area there that way back Noranda came up with a hole that was 33.5 grams over 11 meters. That's called the boundary zone. And not a lot of follow-up. And probably because they were looking for a specific geologic target like VMS, and that's not what you're finding there. Finding more of a structurally controlled environment, kind of like Pretium. There's another region called the Carcass that had a lot of good success in holes, ranging from what I would call, not bad grades like 2 to 3 gram over 10 meters to about 10 grams over 29 meters. And, so there's good follow-up potential there. It's about a 4-kilometer long soil anomaly that looks really good. And then as we head south of the boundary, there's a whole region there we want to tap into. That's all the right geologic structure. It's what they call lithologic structure is perfect. It's where all of the discoveries have been found in, and it hasn't had a lot of work simply because the access back in the old days was very difficult. It's much easier for us today.
How are the other projects looking?
The other projects are coming along well. We're hoping to get into the Chico this fall just to keep the momentum going, because the Forrest Kerr projects, that whole region's limited basically for field exploration to probably 5 months of the year. So I'd like to get into late November, get into the Chico, which is in Saskatchewan, just straight south of the old Claude Resources that Silver Standard bought. And then since then, Silver Standard's increased their land position almost down to the northern end of our property. And they've had some recent success for discovery on the Santoy, in the Santoy deposit area, which is, just 35 kilometers to our north. But we're on the same structure there. So I've got a IP survey being done. Should be starting in about a month. And then we're ready to drill. And I think probably, depending on the financing going on, it could be this summer, but it'll probably be after freeze up, so we can get in there and just keep the interest going, because that's a very viable area to drill. We know exactly where we want to drill. We just want to be a little smarter when we do it by getting this IP survey done. And then the Justin project up in the Yukon. I've got a grant application in to do some work up there this year, and it's getting a lot of attention. That area is because of Golden Predator, and we're actually tied right onto them. And that's a big structural control, intrusive related project, and that quite often you end up with a lot of high-grade veining going on as you get away from the intrusion. And I think, but if you're fortunate enough to be right at the intrusion or on the edge of it, you can have like a Fort Knox environment. So we're sitting on this massive intrusion. We've got our historic drilling that we did back in 2012. We hit in 10 out of 12 holes. So we're sitting on something good there. We're hoping to be able to get up there this year, probably be in the summer. Don't know if we'll do more drilling, but there is some more field work we want to do. And potentially maybe what Golden Predator is looking at is the extension of what we've got, right? We look at it as the engine, and they've got the stuff distal to it. So it's all pretty exciting.
Jim, where is Aben Resources listed?
It's on the TSX Venture. It's ABN.V, and it's also on the Pinks down in the States, ABN.AF.
And if people needed to contact you, how would they do it?
You can call my office at 604-687-3376. You can find us on the internet, www.abenresources.com.
Thank you so much for the update.
You bet.
We've been speaking with Jim Pettit, President and CEO of Aben Resources, online at abenresources.com. We were chatting on May 9th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese, on May 12th. Larry, welcome back to the show.
Well, thanks, Jim. And
I hear you're on the road to Morocco.
yes, and that's a really exciting trip for the company and myself. We're going to the Cobalt Institute. As a matter of fact, there will be companies there that we've already signed NDAs with, and so we may meet up with them and have some discussions. But the total aspect of it all is that I've been following the cobalt market, Jim. The nickel and copper prices have been falling down through the floor, which tells me that there's not going to be a lot of byproduct production starting up, which means a copper mine with a byproduct of cobalt, or a nickel mine with a byproduct of cobalt. It's going to have to come from resources that are cobalt resources, standalone, and there's not many of those around of any size. So where is this cobalt going to come from? So I think the timing is just perfect for us to go there. There's a lot of big companies that are represented from all over the map, and certainly the producers will be there. And so we're really looking forward to it. It's an opportunity that you don't get very often, and this is an opportunity that the company should be able to capitalize on. Now, we've talked about the Cobalt Institute meeting or conference before, so I'm just basically going to go straight into another subject that's been cropping up lately, and that is the other companies that are now talking about recycling. I can't really comment on how far advanced they are or what they're doing because they put out very little detail on what they've done, what the recoveries are, or anything like that. But it's good news for us to have other companies out there that are entering the field because competition is good for the soul, but it's also other people talking about the recycling of lithium-ion batteries, which is going to help our story in the long run. So that's I find that interesting. The things that have been developing in the last actually few weeks, not months, in the last few weeks. The cobalt story is getting stronger. The recycling of lithium-ion batteries is getting stronger. And, I'm just happy to be in a position where I can say, really, the leader in all this, as far as the recycling goes, was American Manganese. We started talking about it in 2015. 2016, we raised the money, and we had our proof of concept completed. We've been able to leach 100% of the vital cathode materials, such as cobalt, lithium, nickel, and manganese. And we've got more studies going on. Again, I hate to say it, but it's tedious work. But in the long run, we'll have a solid patent when we apply for the final patent. And I'm just really excited about going into Morocco because I hear it's a balmy 39 degrees there. And so I expect that I won't be needing my winter coat. So this is going to be a very brief interview, Jim, because we've talked about a lot of these things before. But I just wanted to, again, remind our listeners that we are, in the limelight, at least in the inner circles. Maybe not all there in the outer circles, but we are in the inner circles, and, we wouldn't be getting these invites. We've also been invited to another conference to present, and I'll be talking about more about that later.
Well, Larry, when you said inner circles, people are mentioning American Manganese more often, though, just in casual passing when they talk about the recycling of lithium batteries.
That's true. And, certainly it's a huge benefit to the company to be known by the producers of the cathode material, to be known by the end users, such as the battery companies, or the the ones that use it in other, use our cathode materials and other devices that may not necessarily be EV batteries. Certainly we can do any kind. It's a matter of conforming the shredding, or let's not call it shredding. Let's call it what it is. It's a disassembly of these batteries into a format that we can do bulk testing on it. You don't want to have a plant that's going to do a few pounds. You want to have a plant that's going to do at least a few hundred tons on a run. So this is it's important that we keep on top of all those aspects.
Larry, where are you traded and how can people contact you?
We're traded on the TSX Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMY.V. We're traded in Frankfurt under the symbol 2AM. Our website is www.americanmanganeseinc.com, and I can be contacted at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
My guest has been Larry Reaugh, CEO and President of American Manganese. We were speaking on May 12th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.